If there is one rule in speculation that separates the winners from the losers, it's the rule of consistency. Without it, you are not a trader, you're a gambler, tossing coins into the wind, hoping one of them lands heads up. With it, you give yourself the only real chance that exists in this game, the chance to survive, to endure, to build something lasting in a world that devours the careless. You may think the market is about finding that one big trade, that golden ticket that pays for everything. But let me ask you, what good is one big win if the very next week, or even the very next day, you hand it all back because you couldn't control yourself? The market doesn't remember your last victory, but your account does. And your account has the cruelest kind of memory, one written in numbers that don't lie, one that punishes you for every act of inconsistency, every emotional impulse, every time you break your own rules. Every dollar you lose must be earned back, and that climb is always steeper than the fall. Did you ever notice how a 20% loss requires a 25% gain just to break even? That's not a motivational quote, it's math, and it's brutal. That's why inconsistency is the quiet killer of traders. You might feel confident, you might even get lucky a few times, but the market doesn't reward luck. It rewards discipline. It rewards process. The man who is consistent never puts himself in the hole that the impulsive trader digs for himself every day. He doesn't swing at every pitch, he waits for his pitch. He chips away at the game, patiently, steadily, methodically, building a foundation that lasts, because in trading survival is victory. Consistency is not just a word, it's a law, an invisible force that governs the market as surely as gravity governs the earth. You can ignore it for a while, you can fight against it, but sooner or later, it will pull you back to reality. Break it and you fall, obey it and you rise. So you might ask, all right, Jesse, how do I become consistent? The answer is simple, but not easy. It doesn't lie in chasing every tick, every rumor, every indicator that flashes on your screen. It lies in your habits, the daily, unbreakable habits that define how you operate when the pressure is highest. When I traded, I followed my rules the way a soldier follows orders. I didn't question them in the heat of battle. If I said I would never add to a losing position, I never did. Not once. If I said I would wait for confirmation before entering, I waited, no matter how tempting the setup looked. Because missing one trade is nothing compared to breaking discipline. You can miss 1,000 opportunities and still be alive tomorrow, but break your rules once, and you can lose everything. That's the paradox of this business. The fastest way to win is often learning when not to play. The market doesn't punish bad luck. It punishes inconsistency. It punishes the man who can't control his own behavior. You can have a great system, you can have experience, you can even have insider information. But if you can't stay consistent, it all means nothing. Because the truth is, the market is designed to expose your weaknesses. It's not your system that gets tested, it's your character. Every trader has good trades and bad trades. Even the greatest operators in history took losses. I did too. The difference wasn't in who lost more or who won more. It was in who stayed true to their methods no matter what. The consistent trader keeps his losses small and his process steady. The inconsistent trader lets one bad loss swell into a disaster. Then he spends months, sometimes years, trying to dig himself out of a hole that should have never been dug in the first place. Ask yourself honestly, how many times have you done that? How many times have you broken your plan? Just this once, only to regret it later. Consistency doesn't mean perfection. It means predictability in your behavior, in your decisions, in your reactions. It means being the same trader tomorrow that you were yesterday, regardless of the market's mood. Look at any stock chart, and you'll see it. A stock moves in trends, it builds bases. It breaks out, it pulls back, it repeats. These patterns are timeless. They've repeated for over a century and they'll repeat for another 100 years. The trick isn't spotting them once. It's trading them the same way every time they appear. Do you think a professional trader wakes up each morning and says, maybe I'll do it differently today? Never. The professional already knows what he's going to do before the bell rings. His plan is written. His risk is defined. His stops are in place. He doesn't improvise. He doesn't rely on emotion. He doesn't pray. He executes. Again and again, day after day, like a craftsman shaping stone, patiently, deliberately, perfectly aware that mastery comes not from excitement but from repetition. Picture two traders sitting side by side. The first one reacts to every flicker on the screen. He chases every move. His heart rate rises with every candle. He feels alive, but he's not trading, he's gambling. By noon, he's drained. By the close, he's desperate. The second trader sits quietly. He doesn't move until his signal aligns with his rules. He waits with discipline. When he acts, he does so decisively. When he's wrong, he cuts fast. When he's right, he lets it run. He's not emotional, he's consistent, and while others burn out, he endures. Consistency isn't glamorous, it's not dramatic, it's not the story of overnight success, it's boring. But boredom is the price of success in speculation. Every great trader eventually learns to love boredom, because boredom means you're not gambling, you're executing your plan, and execution builds wealth. You want to know why most traders fail? Because they crave excitement. They treat the market like a casino that rewards adrenaline. But the market doesn't reward excitement. It rewards patience, control, and discipline. Every time you break your rules, you're telling the market, I don't respect your laws. And the market always collects its payment for that arrogance. To be consistent means to think long-term. It means understanding that trading is not about being right today, it's about still being here tomorrow. A consistent trader doesn't seek revenge on the market. He doesn't chase losses. He doesn't double down on bad decisions. He understands that survival comes first, profits come later. He knows that the compounding of steady, disciplined wins builds empires over time. The gambler wants to make a fortune in a week. The consistent trader wants to stay solvent for a lifetime. Let me tell you something: most beginners never realize the market has infinite opportunities, but you have limited capital. You can't trade every setup. You can't catch every move. But you can protect your capital long enough to see the next opportunity. That's consistency. Preservation over impulse. The great traders weren't the ones who found magic indicators, they were the ones who didn't self-destruct. They followed their process like religion. When I was young in the game, I thought success came from prediction, from knowing where prices were headed before everyone else. But years later, I learned the truth. It wasn't prediction that made me money. It was consistency in execution. The tape always tells the truth, but only the disciplined mind can read it without distortion. If you're emotional, you'll see what you want to see, not what's actually there. The market is a mirror. It reflects your discipline, your patience, your restraint. Let's be honest, you won't be consistent every day. You're human. You'll make mistakes. But the goal is to recognize when you've drifted off course and come back fast. That's the mark of a professional: self-correction. The amateur repeats his mistakes. The professional studies them, understands them, and adjusts. You can't eliminate error, but you can eliminate repetition of error. And that's where consistency truly begins. There's a saying I live by. You can't control the market, but you can control yourself. That's not just a quote, it's a law. You can't control the next candle, but you can control your reaction to it. You can't control the news, but you can control your position size. You can't control volatility, but you can control your risk. That's consistency. Control in a world that thrives on chaos. Most traders blow up not because the market beat them, but because they beat themselves. They break their own rules. They let one bad decision become 2, then 10. They turn a small mistake into a career-ending habit. Consistency protects you from yourself. It's a shield against the most dangerous trader you'll ever face, the emotional version of you. So if you take one lesson from this entire business, let it be this: you don't have to be the smartest. You don't have to be the fastest. You just have to be consistent. Because in the end, the market is a mirror, reflecting not the price of stocks, but the discipline of the men who trade them. The consistent trader doesn't rise by luck, he rises by method. He doesn't gamble, he executes. He doesn't react, he prepares. The market will always tempt you to break your rules. It will lure you with false signals and quick profits. But every time you stay disciplined, you separate yourself from the masses. Every time you follow your plan, you grow stronger. Consistency isn't built in a day. It's built in silence, in routine, in the small choices no one sees. It's built in the moments when you want to break your rules, but don't. So if you ever feel lost, if you ever doubt your edge, remember this: consistency is your compass. It keeps you steady when the waves of greed and fear crash around you. It's what turns beginners into professionals, and professionals into legends. And if you hold on to that one rule, the rule of consistency, you'll outlast 90% of the people who ever touch the market. Because while others chase fortune, you'll build it, one disciplined trade at a time. That, my friend, is the law of consistency. The only rule that truly separates the winners from the losers in this endless game of speculation. The professional trader never wakes up in the morning asking himself whether he should abandon his plan and try something wild. Of course not. He sticks to the plan because the plan is what keeps him alive in this game. A trader without a plan is like a ship without a compass. It may sail with confidence for a while, but sooner or later it drifts into storms it cannot survive. You see, in the beginning, when I first came to Wall Street, I thought I could outsmart the market simply by being clever. I believed if I was faster than the next man, more daring, more willing to take a chance, I could make a fortune. And for a time that illusion worked. I made money. Fast, easy, seductive money. But the market has a cruel sense of humor. It lets you win just long enough to make you think you've mastered it. Then, when you least expect it, it takes it all back and asks if you've learned your lesson. I hadn't, not yet. I thought intelligence alone could conquer the street, but it wasn't until I learned the discipline of consistency that I started making what I call real money. Not gambling money, not lucky streak money, but solid profits that stayed in my account. Isn't that the kind you're after? The kind that endures. The kind that allows you to sleep at night knowing you didn't just get lucky, you got it right. Now let me tell you something that most men never understand. Consistency is not only about entries and exits. It's about your entire relationship with money. If you treat your capital like a plaything, the market will snatch it away from you the moment you look away. But if you treat it as a soldier in your army, disciplined, loyal, valuable, and you guard it like a commander who sends no man into battle without reason, then it will fight for you, day after day. I used to think of each dollar as a loyal worker. Why would I send my best worker into a foolish scheme with no plan? That's not trading, that's suicide. The man who gambles with his capital never lasts, because the market does not forgive recklessness. Every dollar lost carelessly is a wound that must heal before you can fight again. A trader's first duty is defense, protecting the troops before attacking the enemy. Look around at the men who fail in this business, and you'll see the same story replayed 1,000 times. They start with a plan, they all do. For a few weeks, maybe even a few months, they follow it. Then the market throws them a curve. A loss hits harder than expected, a setup doesn't behave the way it should, or greed whispers that maybe this time they can break the rule and get away with it. Instead of holding steady, they abandon the very rules that kept them safe. They double down when they should cut losses. They chase when they should wait. They convince themselves the next trade will fix the last one. But the market punishes that kind of thinking. Always has, always will. Have you ever caught yourself doing the same? Be honest, every trader has. The difference is what you do next. Do you learn from it, or do you keep repeating it until the account runs dry? Most men never learn. They blame luck, the market, the news, the brokers, everyone but the one person responsible, themselves. Consistency begins when you stop making excuses and start taking responsibility. It's not glamorous. It's not thrilling. It's steady, patient, sometimes even dull. But it's the only path that leads to survival. You see, the market doesn't care how smart you are or how much you want to win. It rewards behavior, not desire. Consistency is the quiet behavior of success. It's the discipline of doing the same right thing over and over again, even when no one's watching, even when the results don't show yet. It's boring, until it's not. Until one day, you wake up and realize your account has grown, your emotions have steadied, and you're no longer reacting to the market. You're acting within it. That's the turning point every real trader must reach. But here's the truth few want to admit: consistency doesn't feel heroic. The papers won't write about the man who quietly earns 2% a week, every week, month after month. They'll write about the fool who doubled his fortune overnight, or the one who risked it all on a single stock and got lucky. That's the story that sells. But tell me, who survives in the end? The gambler or the steady operator? Who's still standing after the noise fades? You already know the answer. Charts don't lie. They don't flatter. They don't care about your opinion or your hope. They tell you what's happening, not what you wish would happen. The consistent trader respects the chart. He reads it like a novel, patient and attentive, waiting for the next chapter to reveal itself. The inconsistent trader skims the pages, skips ahead, and wonders why the story never ends well. I've seen men stare at charts for hours, searching for what they want to see instead of what's there. That's not analysis, that's self-deception. The consistent man sees the truth, even when it hurts. He accepts what the tape tells him because he knows the tape is never wrong. Only his interpretation can be. When you learn to respect the tape, you stop fighting it. You stop trying to outguess it. You start moving with it. That's when you begin to feel the rhythm of the market, its pulse, its tempo. Every rise and fall becomes part of a pattern you recognize. You stop being surprised by the moves and start anticipating them. But that's only possible when you've built habits that never break. Without that, the market will always be chaos. Now, let's talk about why most traders fail to achieve consistency. It's not ignorance, it's emotion. The market is a mirror that reflects your fears and desires. When you look at it, you're really looking at yourself. Fear makes you sell too early, greed makes you hold too long. Hope makes you ignore your stop, and regret makes you miss the next opportunity. Consistency requires conquering all four: fear, greed, hope, and regret. But you can't destroy them, you can only contain them through rules. Rules are your armor. Every time you follow them, you strengthen your defense. Every time you break them, you strip away protection. The consistent trader doesn't trade emotions, he trades process. And that's why I tell every young operator, don't look for the perfect system. Look for a system you can follow, because no method, no indicator, no signal will save you from inconsistency. It's not about the tool, it's about the hand that uses it. You can hand the best system in the world to an undisciplined trader, and he'll lose. Give a mediocre system to a disciplined one, and he'll win. The difference isn't in the method, it's in the man. When I first realized that, everything changed. My trades became smaller but more meaningful. My losses became fewer and my gains steadier. I no longer felt the rush of gambling, but the calm of precision. It was no longer about excitement, it was about control. The consistent trader learns to love control more than the thrill of risk. He understands that restraint is power. You see, the greatest danger in trading is not losing money, it's losing control. The moment you act out of impulse instead of principle, you've already lost, even if the trade makes money. Because every time you win the wrong way, you train yourself to be reckless. And every time you lose the right way, by following your rules, you train yourself to be consistent. It's not about being right, it's about doing right. The profits follow eventually. There's an old saying, it's not the trade that breaks you, it's the habit. One bad trade can't destroy you, but the habit of breaking rules can. Every trader gets tested eventually. The market will tempt you to break your rules when it matters most. It'll whisper, just this once. That's the voice that ruins men. You must silence it. You must be stronger than your impulses. That's what separates the professional from the amateur. The market rewards endurance. It rewards the man who can sit through boredom, through doubt, through uncertainty, without breaking. Most men can't. They crave action. They mistake movement for progress. They think trading more means earning more. But in truth, the best trades are often the ones you don't take. The consistent trader knows when to sit out, when to wait, when to do nothing. That's the hardest part, doing nothing. But it's also the most profitable skill you'll ever learn. Now, I'll tell you something from experience. There's a moment in every trader's journey when he finally understands that consistency isn't just a strategy. It's a mindset. It's not about what you trade but how you think. It's about creating a mental rhythm that doesn't waver under pressure. Once you reach that point, the market becomes clearer. The noise fades. You stop chasing. You stop fearing. You start operating like a machine, but with a human heart, disciplined, alert, patient. And here's the paradox: consistency gives you freedom. Most think rules are chains, but they're wings. They free you from chaos, from second guessing, from regret. You stop worrying about the outcome because you know your process will protect you. That's when trading becomes simple. Not easy, but simple. The rules guide you, the discipline sustains you, the results follow naturally. So, the next time you sit before your screen, remember this: the man who wins is not the one who knows the most, but the one who does the same right thing, over and over, without fail. The consistent trader is rare, not because consistency is impossible, but because it's hard. It requires humility, patience, and faith. Faith in your rules, faith in your process, faith in the long game. But if you can build that faith, you'll outlast every gambler, every speculator, every fool chasing the next big win. Because in the end, the market is a place where patience meets opportunity, and only the consistent man is there when they finally cross paths. The inconsistent trader tries to guess the ending before the story is written. He stares at the screen, watching every tick, every candle, trying to predict what comes next. And when the market proves him wrong, he blames the stock, or the tape, or the news. He blames everything except the one thing that truly failed: his discipline. The truth is simple but painful. He betrayed his own method. And once you betray your method, you've lost the only real advantage you ever had. In trading, your method is your compass. It's the foundation that keeps you grounded when the storm of emotion hits. Without it, you're just another gambler at the table, tossing coins into chaos and calling it strategy. There's an old saying in this business: it's not the big trade that makes the fortune. It's the series of small, steady, disciplined trades that quietly build wealth over time. That's the truth no one wants to hear. Everyone's searching for that one stock, that one setup, that one magical moment that will make them rich overnight. But the men who actually become wealthy, the traders who last decades instead of months, are the ones who stick to their system through thick and thin. They don't chase hype. They don't guess endings. They let the story unfold as their rules dictate. So let me ask you, are you in this game to gamble, or are you here to build wealth? There's a difference between the two, and the market exposes it every single day. When you think about consistency, don't confuse it with stubbornness. A stubborn man will hold a losing stock because he refuses to admit he's wrong. He tells himself the market is overreacting, that it'll turn around soon, that he just needs to give it a little more room. But every tick against him digs the hole deeper. A consistent man, on the other hand, will cut that stock the moment it breaks his rule. He doesn't argue. He doesn't justify. He obeys the system. Because he knows that discipline today protects his capital tomorrow. One man digs his own grave, while the other lives to fight another day. Which one are you right now? It's not a rhetorical question. Every trader must face it at some point. The market doesn't punish you for being wrong. It punishes you for staying wrong. Consistency protects you from yourself. Every trader, no matter how skilled or experienced, has emotions. Fear and greed never disappear. They just evolve, take on new disguises, and find subtle ways to sabotage your decisions. The only real weapon you have against them is your set of rules, applied with cold, consistent precision. You don't fight fear by pretending to be brave. You fight it by being methodical. You don't beat greed by wishing for less. You beat it by following your plan and respecting your limits. That's the difference between a trader who survives and one who gets swept away. Think back to the last time you broke your rules. Maybe you held a loser a little too long, hoping it would turn around. Maybe you jumped into a trade without waiting for confirmation because you didn't want to miss out. Maybe you moved your stop just a bit farther away, convincing yourself it was a temporary adjustment. And how did it feel afterward? The regret, the frustration, the self-talk that starts with, "I knew better." You swore you'd never do it again. Yet, without consistency, you find yourself repeating the same mistake, over and over. That's why I say consistency is not optional, it's survival. In this business, inconsistency is slow suicide. It doesn't kill you with one bad trade. It kills you one decision at a time. Let's talk about what consistency actually looks like. It means you decide in advance how much of your capital you'll risk on any single trade, and you never exceed it. You set your stops before you enter, and you never move them farther away, no matter what emotion tells you to. You define the kind of setups you'll take, and you don't bend those rules just because you're bored, frustrated, or feeling lucky. You trade like a professional, not a hopeful amateur. If you trade breakouts, you wait for confirmation. You don't anticipate, you don't predict, you react. If you trade pullbacks, you wait for price to come to you. You let the market prove itself before you commit. You don't chase. You don't force. You align yourself with probability, not emotion. Consistency is not glamorous. It's not exciting. It's often boring. But boring in trading is good. Boring means you're following your plan. Boring means you're not reacting to every candle like it's life or death. Boring means you're doing exactly what professionals do, managing risk and executing with discipline. Most traders fail because they're addicted to excitement. They crave action. They think more trades mean more profit. But in reality, more trades often mean more mistakes. A consistent trader knows when not to trade. He knows patience is a position. He knows that sitting on his hands is sometimes the most profitable move of all. Let's go deeper. Consistency isn't about perfection. It's about control. You will take losses. You will have losing streaks. But consistency ensures those losses are controlled, calculated, and survivable. An inconsistent trader lets a single loss spiral into a meltdown. He doubles down, takes revenge trades, chases the market. He's no longer trading his system. He's trading his emotions. And the market always wins that fight. A consistent trader, on the other hand, treats every loss as feedback. He journals it, studies it, learns from it. He understands that each mistake, when analyzed honestly, becomes a lesson that improves his edge. That's how consistency transforms. It doesn't just protect you, it refines you. Let's talk about mindset. The inconsistent trader thinks about money. The consistent trader thinks about process. The inconsistent trader asks, how much can I make? The consistent one asks, how well can I execute? One seeks outcomes, the other seeks mastery. And mastery is what leads to wealth. You see, the market rewards discipline, not desire. It doesn't care how badly you want to win. It only responds to structure, patience, and consistency. You can't control what the market does, but you can always control how you respond. And that control, that discipline, that predictability in your actions is what consistency truly means. Imagine two traders. Both start with the same capital, the same tools, even the same strategy. Trader A follows the rules for a week, then breaks them the moment he feels uncomfortable. Trader B follows his system every day, no matter how tempting it is to deviate. After a year, their results are worlds apart. Trader A is frustrated, burnt out, and broke. Trader B is calm, focused, and profitable. The difference isn't intelligence, it's consistency, because when you act consistently, your results become predictable. And predictability is the foundation of profitability. You can't build wealth on chaos. You can only build it on structure. Consistency isn't about suppressing emotion. It's about not letting emotion dictate your execution. You can feel fear and still act with discipline. You can feel greed and still respect your stop. That's what makes a professional. The amateur reacts to feelings. The professional responds to rules. Every time you stick to your system, even when it hurts, you strengthen the most valuable muscle in trading: self-control. That's what separates the impulsive trader from the master. Now, let's address something most people misunderstand. Consistency isn't rigidity. It's not refusing to adapt. It's about following your system until the data proves it needs change, not until your emotions demand it. The market evolves, systems evolve, but emotional decisions destroy. You refine your method with logic, not with fear or boredom. The consistent trader reviews his performance regularly. He studies his journal, checks his statistics, finds patterns in his wins and losses. He treats his trading like a business, not a game. That's how consistency compounds. Over months, over years, those small, disciplined actions create exponential results. And while others chase hype and headlines, he quietly grows, protected by his method. The market doesn't reward noise, it rewards structure. And the consistent trader understands that consistency is wealth's silent architect. Let me tell you something Jesse Livermore once implied through his actions: the greatest trades he ever made weren't about prediction. They were about patience. He waited. He followed the tape. He didn't guess the ending. He read the story as it unfolded. That's what consistency gives you: clarity. When you stop forcing trades, you start seeing the market for what it is, not what you want it to be. Consistency is the trader's anchor. Without it, you drift. You chase every shiny setup, every hot tip, every rumor. But with it, you move with purpose. You know when to act and when to wait. You become calm in the storm. Because the truth is, trading isn't about finding the next big winner. It's about avoiding the big mistake. The consistent trader survives long enough to catch opportunity after opportunity, while the inconsistent one burns out before the real reward arrives. Remember, this consistency isn't built in a week. It's forged trade by trade, mistake by mistake, day after day. It's the product of repetition, reflection, and restraint. It's not glamorous, but it's powerful. Because when you master consistency, you no longer chase trades. Trades come to you. So the next time you sit down at your desk, ask yourself one question: will you trade like the gambler guessing the ending, or like the writer who follows the plot with patience and precision? One seeks thrills, the other builds freedom. In the end, your trading results are just a reflection of your behavior repeated over time. And that's what consistency truly is: your habits made visible. The market doesn't care about your intentions. It only mirrors your discipline. So don't guess the ending. Don't chase the fantasy. Write your story: one rule, one trade, one disciplined decision at a time. Because in this game, consistency isn't just an advantage. It's the only way to survive long enough to win. If you trade breakouts, you wait for the breakout. If you trade pullbacks, you wait for the pullback. Why would you suddenly switch methods in the heat of the moment? Wouldn't that be the same as tearing up your playbook in the middle of the game? Yet that's exactly what most traders do. The second the market starts moving, they abandon everything they've practiced, everything they've planned. They start reacting instead of executing, and in that moment, all discipline evaporates. I've seen men make fortunes and lose them just as fast, because they could not stay consistent. They thought a winning streak gave them permission to take wild risks. They let confidence turn into arrogance, and arrogance turn into disaster. Have you noticed that the market has a way of humbling traders at the very moment they feel invincible? That's not a coincidence. The market is a mirror. It reflects your discipline back at you. That's why consistency is your anchor. It keeps you grounded when everything's going well, and it protects you when everything turns against you. When others get drunk on success, consistency reminds you that risk never disappears. When others panic in fear, consistency reminds you that rules exist for a reason. The beautiful thing about consistency is that it compounds over time. One disciplined trade may not seem like much. It's quiet, uneventful, almost boring. But add those trades up, day after day, week after week, month after month, and you get something powerful. It's like building a wall brick by brick. One brick looks insignificant, But the man who lays bricks every single day eventually builds a fortress that no storm can tear down. That fortress is your account, your process, your mindset. Isn't that the kind of security you want for yourself? In a world where the market can take everything in a heartbeat, wouldn't you rather build something that lasts? Here's another angle. Consistency doesn't just build your account, it builds your trust in yourself. Every time you say, "I'll follow my rules," and you actually do, you strengthen something inside you. That inner trust compounds just like your capital does, and when the storm comes, and it will come, you'll need that trust more than any chart pattern, indicator, or strategy. Because in that chaos, when everything is uncertain, the only thing you can truly rely on is yourself. But if you've been inconsistent, if you've broken your rules, moved your stops, chased trades you had no business taking, you won't have that confidence. You'll panic. You'll hesitate. You'll doubt every move. You'll watch the market move without you or against you, and you'll be paralyzed, trapped between fear and regret. Consistency is what saves you from that spiral. Because when you've built a habit of following your plan, you don't need to think, you just act. You don't freeze, you execute. You don't question, you trust your preparation. And that clarity, that calm in the middle of the storm, is what separates the trader who survives from the one who's wiped out. Now, let me warn you, consistency is not about being right all the time. Nobody is right all the time. The best traders in history were wrong plenty of times. I've been wrong thousands of times. But the difference between winners and losers isn't accuracy, it's discipline. You can be wrong half the time and still make a fortune if your losses are small and your winners are allowed to grow. But you can be right most of the time and still go broke if your losing trades are big enough. The market doesn't care how often you're right. It only cares how much you lose when you're wrong and how much you make when you're right. So when you hear a trader bragging about being right 70% of the time, remember this. It's meaningless without context. A man who wins 70% of the time but takes massive hits on the 30% he loses is destined to fail. Meanwhile, a trader who wins only 40% of the time but cuts losses quickly and lets profits run can end up far richer. That's the quiet, compounding power of consistency in risk management. Because every time you cut a loss at your stop, instead of hoping it'll turn around, you're protecting your capital. And capital is your lifeblood. Without it, you're done. Every time you stick to your position size instead of doubling down on impulse, you're protecting your future self. Consistency doesn't make headlines. It doesn't feel thrilling. But it's what keeps you in the game long enough to see the rewards that gamblers never get to experience. Think about it. How many traders do you know who made a big win once, only to lose it all within months? They hit a lucky streak, started feeling untouchable, and the market taught them humility. The consistent trader never falls into that trap. He understands that success can be just as dangerous as failure if it leads to complacency. Consistency keeps your ego in check. It reminds you that no matter how many wins you stack, the market owes you nothing. There's a strange paradox in trading. The more consistent you become, the less emotional the game feels. You stop chasing highs. You stop fearing lows. You become steady. Your decisions become process-driven, not emotionally charged, and that steadiness is where real power lies. Because while everyone else is getting tossed around by volatility, you're calmly executing your plan, one trade at a time. That's how professionals think. They don't seek excitement, they seek efficiency. And here's the deeper truth. Consistency isn't just about making money. It's about becoming the kind of person who deserves to manage money. It's about developing the habits, mindset, and patience that build wealth not just in your trading account, but in your character. You stop chasing outcomes and start mastering behavior. You stop being reactive and start being intentional, and that transformation spills into every part of your life. So when you trade, remember this: your biggest battle isn't with the market. It's with yourself. The charts don't care about your feelings. Price doesn't care about your opinion. The market is neutral, cold, and indifferent. The only variable is you, and consistency is the tool that keeps that variable under control. You can't control the market, but you can control your process. You can control your position size, your stop, your risk, your response, and that's all you need. Every great trader you've ever heard of, Jesse Livermore, Paul Tudor Jones, Ed C. Cota, they all had one thing in common: unshakable consistency. They didn't win because they predicted perfectly. They won because they executed relentlessly. Their edge wasn't genius. It was discipline. So stop looking for the magic indicator. Stop searching for the secret formula. The edge you're looking for isn't out there. It's in your habits. It's in your consistency. The trader who follows his system, manages his risk, and executes with discipline will always outlast the one who chases the next big thing. Remember this rule as if your life depends on it, because in trading it does. Consistency compounds just like interest. The more you practice it, the stronger it becomes. One day you'll look back and realize your fortune wasn't built by luck or by timing. It was built by doing the right thing over and over again, especially when it was hardest to do. That's the true power of consistency in trading, in risk, and in life. Doesn't that turn the usual thinking upside down? Most traders believe success comes from finding the next hot trade or being right more often than wrong. But in truth, it's consistency that creates real mastery. Consistency teaches you patience. And patience, my friend, is a rare and precious commodity in this business. Everyone wants action. They want to be in the market every hour of every day, chasing candles, chasing noise, chasing adrenaline. But the consistent trader knows that waiting is often the best trade of all. He waits for the right setup, the right signal, the right conditions. When everything aligns, he acts decisively, without hesitation, without emotion. And when the setup isn't there, he does the hardest thing of all, he does nothing. Can you do that? Can you sit and wait without letting boredom push you into foolish trades? That's the true test of professionalism. I'll tell you something from experience. There were times I sat in my office for days without placing a single trade. The screens were alive, the tape was moving, prices were flashing, but the conditions I wanted weren't there. Do you know how hard it is to sit and do nothing while the market moves without you? It's torture for the undisciplined man. It feels like you're missing out, like opportunity is slipping through your fingers. But for the consistent trader, that waiting is part of the process. He understands that inaction is often the smartest action. He knows his moment will come, and when it does, he'll be ready. His capital will be intact, his emotions steady, his mind clear. That's what separates the disciplined trader from the restless gambler. The gambler needs constant action to feel alive. The professional needs only the right moment to strike. Consistency doesn't stop at trade execution, it extends to record keeping. Every serious trader must keep detailed records of their trades, the reason for entry, the logic behind it, the result, and what they learned. Over time, those records become a mirror. They show you patterns you could never see in the heat of the moment. Maybe you perform better in trending markets and lose money in choppy ones. Maybe you're stronger in breakout plays but weaker on pullbacks. Without records, how would you ever know? Do you think a serious businessman would run his company without keeping books? Then why would you treat your trading any differently? Your trading journal is your business ledger. It tells the story of your strengths and weaknesses, your discipline and your mistakes. Ignore it, and you're flying blind. Study it, and you gain insight that money alone can't buy. Another truth: consistency is the antidote to overtrading. Overtrading is the disease of the impatient and the greedy. It's the silent killer of trading accounts. The overtrader jumps from one stock to another, one setup to the next, chasing every flicker of movement. He convinces himself he's being productive, but he's really burning himself out, emotionally, mentally, and financially. He pays endless commissions, racks up countless small losses, and ends each month wondering why he's exhausted and broke. The consistent trader, on the other hand, is selective. He waits for his setup, his signal, his confirmation. He may take fewer trades, but each one fits his plan like a glove. He's not chasing noise, he's executing precision. And while the overtrader spins his wheels, the consistent trader's account grows steadily, quietly, surely, and sustainably. Which approach do you think leads to real wealth? Consistency also teaches you the art of scaling. Scaling is not about doubling down in excitement. It's about increasing position size in harmony with proven success. The consistent trader never risks more just because he feels lucky. He doesn't let emotions dictate his size. He increases gradually, methodically, as his equity and confidence grow in sync. That's how you build a fortune, slowly, steadily, with control. The impatient trader, on the other hand, gets one or two wins and thinks he's invincible. He raises his size too quickly, ignores his limits, and when the inevitable losing streak comes, it wipes him out. The market punishes arrogance faster than any other weakness. But the consistent trader doesn't make that mistake. He respects the climb. He lets success compound instead of forcing it. Consistency isn't glamorous. It won't impress anyone on social media. It doesn't give you adrenaline rushes or heart-pounding excitement. But what it gives you is far more valuable. It gives you longevity. It gives you peace of mind. It gives you control. The consistent trader knows that trading isn't a race, it's a lifelong discipline. Every decision builds or erodes your foundation. Every trade is a brick in the wall of your career. Lay those bricks carefully, patiently, and one day you'll look up and find you've built something indestructible. a fortress of financial security, built not by luck or timing, but by consistency. Let me tell you another secret. Consistency builds trust, not just with the market, but with yourself. When you follow your rules day after day, trade after trade, you start to believe in your own word. That trust is priceless, because when fear strikes, and it will, you'll know you can rely on yourself. When temptation whispers, you'll know how to say no. Most traders crumble not because they lack knowledge, but because they lack self-trust. They've broken their rules so many times they no longer believe they can keep them. But every consistent decision you make rebuilds that trust. It's like strengthening a muscle. Each repetition makes it harder to break next time. Consistency also gives you emotional stability. You stop chasing the high of a win or fearing the pain of a loss. Wins and losses become data, not drama. You stop reacting, you start responding. That shift in perspective changes everything. It's how you go from being a victim of the market to being a master of your craft. You see, the market rewards consistency because it values survival above all else. The traders who last long enough to win are those who stay disciplined when everyone else loses their head. Patience, discipline, self-trust, record-keeping. These aren't just habits. They are your edge. They are what separate you from the crowd of gamblers who think trading is about prediction. The consistent trader doesn't predict, he prepares. He doesn't chase, he executes. He doesn't rush, he waits. And when his moment comes, he acts without hesitation because his process has already done the thinking for him. That's what mastery looks like. Not someone glued to the screen taking 50 trades a day, but someone who moves with precision, who knows when to strike and when to stand down. Someone who understands that trading isn't about being busy, it's about being right when it matters. And consistency is what makes that possible. So the next time you feel impatient, remember this: doing nothing is often the smartest move you can make. The consistent trader doesn't fear missing out, he fears breaking discipline. He knows that capital preserved is opportunity multiplied. He knows that every disciplined decision compounds just like interest. And he knows that while others are chasing chaos, he's building stability. That's how you last. That's how you win. Not by trying to catch every move, but by mastering yourself. The market will always tempt you to act without reason. But the consistent trader, the one who keeps his emotions in check, his records clean, his methods steady, he's the one who survives the longest and profits the most. Because consistency isn't just a rule, it's a way of life. It's the quiet power that turns traders into professionals and professionals into legends. And that, my friend, is how you build a fortune that no storm can ever take away. Have you ever been tempted to bet big after a winning streak? That temptation, my friend, is the silent enemy of consistency. It whispers that you've cracked the code, that you can't lose now, that the next trade will double your gains. But that voice is a liar. Many fortunes have been lost to that exact illusion. The moment a trader feels invincible, he is standing on the edge of ruin. The consistent trader knows this. He respects the danger that comes after victory. He keeps his risk steady, no matter how hot the streak. Because consistency isn't just about taking trades according to plan. It's about protecting yourself when everything feels easy. And the irony is, the times you feel most confident are often the times you're most vulnerable. Let's talk about real wealth. Real wealth in trading is not built in a single lucky trade. It's not the result of one wild swing that happened to go your way. It's built brick by brick, rule by rule, day after day, year after year. Every small, disciplined decision adds to the foundation. The man who is consistent may not impress the crowd in the short run. He doesn't boast about doubling his account overnight, but in the long run, he passes them all. While others blow up chasing quick glory, he compounds quietly. He preserves his capital, learns from his trades, refines his method, and lives to trade another day. That's the trader who wins in the end. Not the gambler, not the dreamer, but the one who shows up with discipline every single day. Isn't that the kind of trader you want to become? Consistency doesn't just build profits, it builds reputation. On Wall Street or in any trading community, people might talk about your big wins, but they respect you for your steady hand. If you're consistent, other traders trust you. Brokers respect you. Your word carries weight. You become someone whose opinion matters, because you're grounded in process, not noise. But if you're erratic, jumping from strategy to strategy, changing your plan with every headline, no one takes you seriously. The market doesn't either. Consistency is character in motion. It's what tells the world you can be relied upon, that you'll do what you say, and that your results aren't luck. They're earned. Which would you rather be? The trader who's lucky once, or the trader who's respected for life? Now let me ask you a question: what's stopping you from being consistent right now? Think about it. Is it greed? Is it fear? Is it impatience? The truth is, the only thing standing between you and consistency is yourself. The market doesn't care about you. It doesn't know your name. It doesn't owe you anything. It simply moves up, down, sideways, without emotion or agenda. The only variable in this equation is you. You can't control what the market does, but you can control how you respond. And the only intelligent way to respond is with consistency. Think of it this way: every single trade you take is a test. Not of the market, but of yourself. Will you follow your rules this time? Will you execute your plan, even when it feels uncomfortable? Or will you let emotion dictate your action? Each trade reveals who you really are as a trader. When you fail that test, when you break your rules, move your stop, chase a loss, the market punishes you, not out of cruelty, but out of truth. When you pass the test, when you trade with discipline, the market may not reward you immediately. You might even take a loss. But over time, those small acts of discipline compound into something powerful. They become your edge. Do you see why this principle is so important? You cannot control whether a single trade wins or loses. You can't control what the market does next. But you can always control your process, your preparation, your risk, your execution. You can control whether a trade was taken for the right reason, in the right conditions, with the right mindset. That's consistency. And over hundreds of trades, that consistency becomes the edge that separates winners from losers. Without it, you are just a leaf in the wind, tossed around by every price tick, every emotion, every rumor. But don't misunderstand me. Consistency does not mean rigidity. A consistent trader is not stubborn or blind. He knows that markets evolve. What worked in one phase may not work in another. But even adaptation must be systematic. You don't abandon your plan because of one losing week. You study. You observe the new conditions. You test adjustments. And when you find what works, you apply those new rules with the same discipline as before. Adaptation is intelligence. Consistency is the structure that gives it meaning. Without structure, adaptation becomes chaos. That's the line between the professional and the amateur. The amateur reacts, the professional responds. The amateur improvises in the heat of the moment, trying to outguess the market. The professional follows a tested process. He's flexible in thought but firm in principle. When conditions shift, he doesn't panic. He updates his plan. He never trades out of emotion, because he knows emotions are temporary, but rules are eternal. Let me tell you something about the psychology of consistency. It's not about perfection. It's about commitment. You will make mistakes. You will break your rules sometimes. But what matters is how quickly you correct yourself. The consistent trader doesn't spiral into self-blame. He acknowledges the slip, studies why it happened, and gets back on track. Each mistake becomes a lesson. Each recovery strengthens his discipline. Over time, he becomes almost immune to emotional extremes, because his process is his anchor. And that's the real secret of trading longevity. Consistency protects you from the storms. Markets will go through cycles, bull runs, crashes, consolidations. Systems will come and go. News will always cause panic. But your discipline, your process, your consistency, that's what keeps you alive through all of it. The reckless trader burns bright and dies fast. The consistent trader builds something that endures. Ask yourself this: if you lost every indicator, every piece of news, every chart pattern, would you still have a method to rely on? Would your principles still guide you? If the answer is yes, then you've already achieved something most traders never will. You've built internal consistency, the kind that no market condition can shake. Consistency is not just a trading strategy, it's a philosophy of life. The same principles apply everywhere. In health, in business, in relationships. The people who show up every day, who do the work even when no one's watching, are the ones who create results that last. Trading is no different. The market rewards the few who can stay calm, rational, and steady in a world built on uncertainty. So remember this: every trade is an opportunity, not to make money, but to practice discipline. Every losing trade is a lesson in patience. Every winning trade is a test of humility. Every day in the market is another chance to strengthen your consistency. You don't need to be perfect. You just need to be steady. When you master consistency, everything else follows. Your equity curve smooths out. Your confidence grows. Your emotional swings shrink. You stop chasing the next big move and start focusing on execution. You stop hoping for luck and start trusting your method. And that trust, over time, compounds just like your capital. That's the quiet truth most traders overlook. You don't beat the market by being smarter. You beat it by being steadier. You win not through brilliance, but through discipline. You last not through luck, but through control. Because in the end, the market doesn't reward intensity, it rewards consistency. So the next time you feel that urge to break your rules, to bet big after a win, or to chase a move out of boredom. Pause. Remember who you are. Remember what got you here. Remember that true strength in trading isn't found in a single bold move. It's found in the quiet discipline to do the right thing, again and again, until success has no choice but to follow. Notice that in life, the men who succeed are often not the most talented, but the most disciplined. Trading is no different. It's not about being the smartest man in the room. It's about being the most consistent. Intelligence without consistency is wasted, but average intelligence with iron consistency can build a fortune. Which one do you think matters more in the market? And here is a secret that few ever grasp. Consistency creates freedom. At first it feels like rules or chains restricting you, holding you back, but in reality, they set you free. Free from doubt, free from panic, free from the endless cycle of mistakes. Once you have a method and follow it, you no longer waste energy second guessing yourself. You know what to do and you do it. Isn't that the kind of clarity you're seeking? Let me repeat what I said earlier. Every dollar you have is a soldier. Would you send your soldiers into battle without a plan? Would you let them run wild, charging in every direction? Or would you lead them with discipline and consistency, maximizing their strength and minimizing their losses? The trader who is consistent builds an army that grows stronger year after year. The trader who is inconsistent sends his army to slaughter. Which commander would you rather be? So when you hear about the rule of consistency, don't dismiss it as just another slogan. Understand it as the very foundation of successful trading. Without it, you cannot last. With it, you give yourself the only real chance at wealth that the market offers. Consistency is the trader's shield. It keeps small losses small and allows profits to grow steadily. That one idea, if you grasp it, can change the entire way you approach the markets. People come into speculation with the wrong picture in their heads. They think it's about predicting the future, about being right on every call, about catching lightning in a bottle. But let me ask you something. What good is being right once in a while if you can't keep the money you make? What good is a single big hit if the very next trade wipes it out? That's where consistency comes in. Without it, your account is at the mercy of every whim and every emotion. With it, you have a shield, something that protects you from yourself, from the noise, from the endless temptations the market throws at you. When I say consistency keeps small losses small, I mean that literally. Every trader takes losses, there's no escaping that. The difference is in how you handle them. An inconsistent man takes a loss and hopes it will turn around. He adds to it. He moves his stop. He rationalizes. Pretty soon, what started as a small cut becomes a wound that bleeds his account dry. The consistent trader never lets it get that far. His rule is simple. Take the loss quickly. Take it cleanly and move on. The shield of consistency is what prevents a scratch from turning into an amputation. Now, doesn't that sound like survival? And on the other side of the equation, consistency is what lets profits grow. Do you know why most traders never let their profits run? It's because they are inconsistent. They cut winners short. They jump out at the first sign of hesitation. They second guess their own rules. They say they'll hold for a move, but then fear whispers in their ear, and they sell too soon. The consistent trader does not play that game. If his rule says to hold until the trend is broken, he holds. If his plan is to pyramid carefully as the move goes in his favor, he does it without hesitation. This is how consistency turns an ordinary trade into a meaningful profit. Think of consistency like compound interest. One small steady decision may not seem like much on its own, but repeated over weeks and months, it becomes a force that shapes your entire equity curve. Each time you cut a loss short, you protect capital for the next opportunity. Each time you let a winner develop, you add fuel to the fire. Over time, this is what separates the operator from the gambler. Have you noticed how gamblers always talk about the one time they made a killing while the real traders talk about the process? That's not an accident. It's the difference between a story and a business. Let's get practical. Consistency starts before you even enter a trade. It's in the way you size your positions. Do you risk the same fraction of capital each time? Or do you bet bigger when you're excited and smaller when you're afraid? If you do the latter, you are inconsistent and sooner or later the market will punish you. But if you size consistently, you never put yourself in a position where one loss cripples you. You live to fight another day. That's the shield in action. Consistency also shows up in how you pick trades. Do you know the setups you're looking for, or do you change your approach every time the tape ticks? An inconsistent trader is like a man wandering through the woods without a map. One day he's chasing breakouts, the next he's buying dips, the next he's shorting rallies. He has no compass, no path, no way of measuring his own progress. The consistent trader, on the other hand, knows exactly what he's looking for. He has a checklist, and if the stock doesn't meet the conditions, he passes. That discipline is what keeps him out of trouble and positions him for the right opportunities. You may wonder, doesn't consistency make trading boring? And my answer is yes, it does. But boring is where the money is made. Excitement belongs to the gamblers. They chase thrills, they crave action, and they pay dearly for it. The consistent trader sees his work as a business, not a game. He repeats the same actions over and over. The way a craftsman repeats his strokes, the way a farmer tills the soil. Each act on its own may seem small, but together they create wealth. Would you rather have excitement or results? Here's another thing to consider. Consistency is what keeps you from overtrading. Markets are full of noise, endless little moves that tempt you to jump in. If you have no consistency, you'll be in and out all day, bleeding from commissions, worn out from stress, chasing shadows. But if you are consistent, you ignore the noise. You wait for your conditions, your setups, your moments. That's why consistency is not only a shield for your money, but also for your mind. It saves you from the exhaustion that breaks so many traders. And don't think consistency is only about discipline. It's also about confidence. When you know you are consistent, you trust yourself. You don't panic when a trade goes against you because you know you'll cut it. You don't hesitate when an opportunity appears because you know it fits your rules. That self-trust is priceless. Have you ever doubted yourself so much that you froze at the screen, unable to act? That happens to men who have no consistency. The market shows them something, but they don't know if they can trust their own judgment because they've broken their own rules too many times before. But when you're consistent, your own record becomes your ally. You look back and see that you have followed your plan time and again, and that gives you the confidence to act. Let me tell you something else. Consistency protects you in bull markets and in bear markets alike. When the crowd is euphoric, buying anything that moves, your consistency keeps you from joining the madness at the top. When the crowd is panicked, dumping stocks at the bottom, your consistency keeps you from selling in despair. You follow your rules, not the crowd. That is why the shield works. It defends you against the most dangerous force in speculation, the herd mentality. Do you see how vital that is? Think back to the traders you've known, or maybe to your own past. How many times did inconsistency cost you dearly? Maybe you swore you'd never average down, but then one day you did and it blew up on you. Maybe you promised yourself you'd never chase a runaway stock, but then you broke the rule and you bought the top. Each of those mistakes comes from the same route, dropping the shield of consistency. And once you drop it, the market never hesitates to strike. Now consider the opposite picture. Imagine a trader who sticks to his rules no matter what. His losses are small because he always cuts them. His winners grow because he lets them. He doesn't overtrade. He doesn't chase. He doesn't gamble. Each month he makes progress, maybe small but steady. Over years his account grows into something substantial. He is not at the mercy of the market because he has built a shield that protects him. Isn't that the picture of the trader you want to become? Consistency is not glamorous, but it is powerful. It won't make headlines, but it will make fortunes. It won't give you excitement, but it will give you security. It is the quiet force that allows small losses to remain small and profits to compound into wealth. And without it, no matter how clever you are, no matter how lucky you get, the market will eventually take everything back. Treat every dollar as a soldier, never send it into battle without a consistent strategy. That's not a fancy saying. It's the very heart of survival in this business. A man who doesn't respect his capital, who doesn't understand that each dollar is a unit of power, is already finished before he begins. Think about it. An army with no discipline, no plan, and no leadership will get slaughtered, no matter how many soldiers it has. The market is a battlefield, and your account is your army. If you don't lead with consistency, you're marching your men into chaos. Do you really expect victory under those conditions? Every time you place a trade, you're deploying troops. Do you send them in without a map, without a strategy, without knowing the terrain? That's what happens when you chase a tip, when you follow a rumor, when you buy because the crowd is excited. That's like ordering your men into a valley without scouting at first. The enemy fear, greed, volatility waits in ambush, and your soldiers never come back. But if you treat every dollar as a soldier, you respect it. You ask yourself, is this the right battle? Is this the right time? Is this the right formation? Only then do you send them forward. That's what a consistent trader does. Now, most people don't think of money this way. They see capital as chips on a table, something to play with. They talk about betting on a stock the way gamblers talk about horses. And like gamblers, they run out of chips. But the operator, the serious trader, sees capital as life itself. He doesn't gamble with it. He doesn't waste it. He deploys it with care, knowing that once a soldier is gone, it takes time and effort to replace him. Have you noticed how easy it is to lose money quickly, but how slow it is to earn it back? That's because you can send 1,000 soldiers into a bad fight and lose them all in a day. But to rebuild that army takes months, even years. Consistency is the general's discipline. A general doesn't wake up one morning and decide to abandon all strategy because he feels lucky. He has a plan and he follows it. He trains his men. He studies the enemy. He prepares his resources. A consistent trader does the same. He knows the setups he will take, the risk he will allow, the conditions he will require. Each dollar is sent into battle only when the conditions are favorable. Do you see the difference between that and the man who throws money into any move that looks exciting? Let me give you an example. Suppose you've built a rule that you never risk more than 2% of your account on a single trade. That rule is your formation, your battle plan. If you respect it, your soldiers never die in waves. A loss here or there is acceptable is the price of doing business. But if you ignore that rule, if you suddenly throw 10 or 20% of your army into one uncertain fight because you feel confident, you risk disaster. And when disaster comes, as it always does for the careless, you don't just lose a skirmish, you lose the war. Have you ever done that? Put too much on one idea because you felt certain? If so, you know how costly that mistake can be. Another angle. Treating every dollar as a soldier changes how you see losses. When you lose a trade, you don't curse the market or blame your luck. You see it as the cost of battle, the sacrifice of a few men so the army can live to fight again. A consistent trader accepts those casualties without emotion. He knows that no general wins every battle, but the war is won through discipline and planning. An inconsistent trader, on the other hand, takes losses personally. He becomes reckless, desperate to get even. He throws more soldiers into hopeless fights and soon his army is destroyed. Which one are you? This idea also protects you from greed. Greed is the commander who wants victory at any cost, who keeps pushing his men forward long after the battle is won, who chases glory and ends up leading his army into ruin. In trading, greed makes you add to a position without a plan or hold on to a winner long after the trend is broken. Consistency keeps greed in check. It tells you when to advance and when to retreat. It reminds you that soldiers must be preserved, not wasted. Isn't that what you want for your account to grow stronger, not weaker over time? Think of the traders who go broke. Their story is almost always the same. They had an army of capital, maybe a large one, but they treated it carelessly. They made exceptions to their rules. They gambled.